tell me what to do. I don't give a damn if you say you disapprove. I'm gonna make my move, I'm gonna make it soon. And I'll do it cause it's what I wanna fucking do. Cause all these opinions and all these positions, they come in millions, they blocking your vision. But no, you can't listen, that shit is all fiction cause you hold the power.
Hi there. I always hear the same grief over and over again, just with another tune as time goes by. It's a never-ending story. So, this video had to be made. The markets are down and I'm in the red on all my stocks. Oh, Trump is crashing the market. Oh, the Trump tariffs will lead to inflation and maybe even a recession. Experts say Trump is the worst ever for the economy. Trump this, Trump that. It seems like a lot of new investors and maybe even seasoned investors could need the reassurance and maybe a little bit of look at history that everything is going to be okay. No matter how the world and the markets behave, there are almost always inevitable gains. You will get these gains over time if you only have patience and persistence.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock because it goes down?
Selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, I'll pay you $15,000, you don't sell it because the quote's $15,000. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes.
Let's just look at some stats just to underpin my point. In 1929, the stock market crashed 89%. Oh, that hurt. In 1973, the stock market crashed 48%. In 1997, the stock market crashed 34%. In 2000, the stock market crashed 49%. In 2008, the stock market crashed 55%. In 2020, the stock market crashed 34%. And you know what? In 2022, the stock market actually dropped 24%. Seems like nobody remembered that one. But in 2024, the stock market reached an all-time high. And what about now, 2025? Yes, we're seeing a drop. And so be it. It's part of the market. And now we're dropping again. But remember, since 1926, the stock market has returned an average of almost 11% a year with dividends reinvested. That is 1.3 million % increase in almost 100 years. Look at the history. The Great Depression in the 30s, everything was a lot worse than anything we have ever seen then. But again, everything worked out fine. We humans, we are very resilient and we are experts in inventing new stuff that makes almost everything more effective. This time is no different. Markets go up, markets go down all the time. One could even ask if this is actually on purpose. Is there a couple of hedge funds deciding to earn a lot of money? They could actually start some stories that Trump and his tariffs are really bad for the economy. It doesn't take a lot of money to get all the media to repeat the story. If you don't believe me, watch the great show called Billions, which is made from real-life stories, or watch my video where Jim Cramer tells us how he did it when he was a younger man. But instead of trading in and out all the time, selling and waiting for the lows, waiting for the highs, just look at what Warren Buffett and Berkshire Hathaway is invested in. It's what I call normal companies. They don't have a lot of money in the new hyped up startups or the new shiny thing. They simply invest in good American businesses over a very long time. So, when in doubt, zoom out. If you have a time horizon lower than 5 years, or you don't have the stomach, maybe, and/or patience, maybe you shouldn't invest in stocks. Maybe bonds are more for you. When you get past the 10-year mark, the risk is almost gone and success is almost guaranteed. Yeah, I know, the next people always say is, But if I invested in January 2000 and needed the money in 2016, I would have made no returns at all. Well, that's partially right. If you really are an investor, you don't just buy once and never again. You would invest regularly, and by doing so, getting a lower and lower average price. That's called dollar cost averaging. And by using this method, you will reap the benefits when the markets tumble and stocks go on sale. So by dollar cost averaging, you maximize profit. So be aware of these downturns and use them to your favor. And I gotta say, that has given me a lot of great returns. During COVID in March 20, I bought hand over fist, used leverage, and really went crazy, as everything was on a major sale. I bought Ford Motor Company. It was around $4, and it hit $20 8 months later. Tesla sold for around $35. It hit $380 8 months later. That's a 10x. Microsoft sold for $158 and doubled within 8 months. There were deals all over the place, and I was convinced that this new type of flu would pass like all other problems the world has experienced. The only thing I didn't know was how long it would take. But if we look at the graph for the S&P 500, COVID is just a small blip on the screen. And then the so-called correction in 2022 was actually almost as bad, just over a longer period. But no one remembers that all of a sudden.
It's actually a good point.
So what's the point? Well, if you have decided to be invested in stocks, you should know that there will be corrections around every 2 years. So expect a 10% drawdown occasionally, and invest more when that happens. A market crash occurs approximately every 7 to 8 years. This is where you buy more of the great companies. But remember, don't be reckless like I did. Always have your emergency fund and don't touch it. Don't touch it!
No touchy.
This is your insurance.
Your emergency fund is insurance. You know what insurance does? It costs you money. It doesn't make you money. Why do you buy insurance if it costs you money? Because it covers your butt when things go bad. That's why you buy insurance. It's what your emergency fund is for. It covers your butt when things go bad.
Also, the markets have been flat a lot of times, around every 20 years. But these are still times when you should invest. That's why I always say, consistency and patience are the most important things in investing. It's just like training. You need to do it consistently, even if you don't see any progress. The results will inevitably come. Trust me. And if all this is too much for you, then just buy the S&P 500 every month, just like clockwork, and don't ever look at the price or the portfolio. Automate the investing and sleep well at night. When you eventually see the portfolio, you will be amazed how compound interest worked its wonder. Here's a short example where if a person invested $5,000 in the S&P 500 and considered it a pension fund, which means never touching it in any way, shape or form. The time frame I use is 40 years, and I know that's a long time. Person 1 invested $5,000, never invested again. After 40 years, the portfolio would have a bit over $226,000. That's nice for never having done anything at all. Person 2 also invested $5,000, but managed to invest $200 every month, every year for the duration. That portfolio would become almost $1.2 million after 40 years. So this could be possible, especially if one invested extra when markets are down. So don't panic when the inevitable correction or crash occurs. Simply hang on and wait, or even better, and invest more when everything is on sale. And the most important thing is hit the like button and help me grow the channel. Love ya!
Love you.
And as always, the best investment you can do is in you. The more you learn, the more you earn. See ya!
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning. There ain't no point in resisting.